The market is calling Sonic a zombie chain, and looking at the raw data, it's hard to argue against them. The network is generating $147 in daily revenue. You heard that correctly, 147. For a blockchain that was supposed to kill Solana, that number is catastrophic. We are seeing rumors that the leadership has vanished. We are seeing early investors blocked on social media for asking simple questions about the treasury. The sentiment is not just bearish, it is toxic. But here is the contrarian reality that 99% of investors are missing. The price is sitting exactly on the 3618 Fibonacci extension. The last time we were here, we saw a 50% bounce in a matter of days. Is Sonic a terminal short heading for zero? Or is this one of the most asymmetric, high-risk trade of 2026? Today, I'm going to show you the ugly truth behind the data and the specific setup I'm playing with 2% of my portfolio. Sonic is currently trading between 6 and 7 cents. If you have been with this ecosystem since the Fantom days, looking at this chart is physically painful. We have effectively round-tripped the entire market cycle. We are down over 95% from the peak of $1 back in February 2025. Think about the psychology here. The narrative 12 months ago was pure euphoria. Sonic was promised as the fastest execution layer in the industry. It was supposed to process thousands of transactions per second. It was supposed to bring institutional liquidity. Instead, we are battling to hold all-time lows. The investors who bought the migration narrative are underwater by 90%. This creates a market structure defined by capitulation. There is no hope left in this chart. This is definitely not just a price dip. It's a total liquidity exodus. We have seen total value locked plummet from a peak of $1.2 billion down to just $58 million today. That's money that didn't just sell the token, it left the ecosystem entirely. So why are we even talking about this? Why not just let it die? Because in crypto, maximum financial opportunity often hides in maximum fear. We are sitting on a make or break support level. If this level holds, the mean reversion potential is massive simply because there are no sellers left. If it breaks, we are going much lower. We need to look at the fundamentals because there's a massive divergence right now between what the team says and what the chain is actually doing. The team has been aggressively pushing their staking guides this week, trying to lock up supply. But let's look at the actual incentives to make sure what is really going on under the hood. Here's the reality. If you delegate your tokens, you are earning 4.8% APR. Even if you go through the trouble of running a validator, you are capping out at 5.7%. In a market where risk-free US Treasuries pay 4.5%, why would anyone take on the volatility risk of a distressed altcoin for an extra 0.3% yield? The risk premium simply isn't there. The incentive structure is broken. But when we open Token Terminal and look at the on-chain data, it tells a much darker story. The network is processing 1 transaction per second. 1. Let that sink in. The industry average for Layer 1 blockchains is around 8,300. Sonic is doing 1. Its market share of activity is 0.1%. Competitors like Solana and ICP are doing thousands of times more volume. Even worse, the daily fees generated are around $150. For a blockchain that still holds a market cap of over $200 million, that is an earnings multiple that makes absolutely no sense. It's a ghost town. The economic velocity is dead. And then there is the human layer. We are seeing credible reports of community members being blocked by official accounts just for asking about the treasury status. The prevailing sentiment on Twitter is that key figures like Cronje and Michael Kong have stepped back or checked out after the Fantom migration. Whether that is true or just FUD, it has broken trust. And in crypto, trust is the currency. However, markets are forward-looking mechanisms. The question isn't, is it bad now? The question is it priced in? At 6 cents, the market is pricing in bankruptcy. The market is pricing in a rug pull. This means any spark of life, a single working protocol, a single partnership, or a confirmable statement from leadership could re-rate this asset violently to the upside.
Now, let's put the rumors aside and let the chart do the talking. I'm looking at the 3-day timeframe. This cuts out the intraday noise. Structurally, we are trapped inside a brutal descending channel that has been respecting price action since the February 2025 peak. You can see the orange dotted lines on my chart. Every single rally for the last year has been sold at the top of this channel. It is a perfect downtrend. Right now, we are grinding against the absolute bottom of this channel. We are sitting exactly on the 3618 fib extension. This is anchored from the swing high in July. The 3618 is an extreme extension. It's statistically rare for an asset to stretch this far without at least a relief bounce. This is our line in the sand. Look at the exponential moving averages. We are trading well below the 10 and 21. Those are the blue lines you see. We are miles away from the 55 in purple and the 100 in yellow. In a healthy trend, these moving averages act as support. Right now, they are heavy resistance. The 21 is sitting right around 9 cents. That is our first major ceiling. The gap between the current price and the mean is at historic extremes. But here's the signal that keeps me interested. Look at the Fibonacci RSI at the bottom of the screen. Price is making lower lows, dropping from 10 cents down to 6 cents. But look at the oscillator. It is making higher highs. This is a classic bullish divergence on a high time frame. It tells us that seller exhaustion is real. The bears are running out of ammo. The momentum is shifting even though the price hasn't reflected it yet. This is often a precursor to a sharp reversal. We also have a gap fill scenario. The volume profile on the left shows very little resistance between here and 30 cents. If we can reclaim the 11-cent level, the move to 25 cents could happen fast because there is no historical friction, no bag holders in that specific zone. So how am I trading this? I'm treating Sonic as a distressed asset. This is not a safe yield play. This is a catching a falling knife play. It represents exactly 2% of my portfolio, no more. I'm major in Bitcoin and Ethereum. I have been loading in this green box area between 7 and 9 cents. I'm buying the fear because the risk to reward makes sense here. My hard stop is a weekly candle close below 6 cents. Why 6 cents? Because if we lose the 3618 fib, the next support is, well, there isn't one. The chart enters price discovery to the downside. If that level breaks, I'm out. In fact, if Bitcoin loses $80,000, I'll flip net short on Sonic, targeting 5 cents as the next logical psychological floor. If this divergence plays out, I'm not waiting for the moon. I'm scaling out aggressively into strength. Target 1 is 11 cents. That is the 2618 fib. I'll move my stop loss to my entry price once we hit this. Target 2 is 16 cents. This is the top of the descending channel. Target 3 is 25 cents. If we get a miracle run to 42 cents, I'm dumping the rest of the position. I'm not looking for a new all-time high. I'm looking for a mean reversion trade to the moving averages. I just want to catch the snapback. So let's zoom out and weigh the probabilities. The bear case. Bitcoin corrects to $70,000. Sonic loses the 6-cent support. The abandonment rumors represent reality. The token goes to sub 3 cent. The probability of this is moderate, given the current macro environment. The bull case. The staking APR stabilizes the float. The selling pressure dries up simply because everyone who wanted to sell has already sold. We get a dead cat bounce to test the 55 exponential moving average. That would be a 150% move from current levels. Think about the math. I'm risking 1 cent of downside, from 7 cents to 6 cents, for potentially 10 to 20 cents of upside. That is a 1 to 10 risk-to-reward ratio. As a disciplined trader, I'll take those odds every single day, even on a zombie chain. Look, Sonic is in the intensive care unit. The vitals are weak, the doctors are missing, and the bill is due. But the patient isn't dead yet. This is not an investment for the faint of heart. This is a trade for those who understand how to manage risk. I'm betting on a bounce, not a resurrection. My position size is small, and my stop loss is tight. If you want to see exactly when I pull the trigger on these trades, or if I get stopped out in real time, join my free Telegram group. The link is in the pinned comment below. I post my daily setups there before they make it to YouTube. And if you want to understand the full history of how we got here, from the Fantom glory days to the Sonic migration mess, watch my deep dive video right here. It explains the tokenomics change in detail. Never financial advice, and I'll see you in the next one.